interviewing the leading private equity executives and unlocking the secrets of success. Welcome to the Private Equity Podcast with Alex Rawlings.
Welcome back to the Private Equity Podcast. Today joining us is Kjael Skaalerud, CRO at Altvia and founder of Skaling Ventures. Welcome and thank you very much for sharing your insights into the private equity industry.
Thank you for having me, Alex.
Perfect. So for those who don't know you, Kjael, please give us a kind of 60 to 90 second breakdown of you, please.
Sure. So currently CRO at Altvia, and we're a technology platform for private capital markets. So think something that helps manage the fund lifecycle at private equity and venture capital firms. So raising capital, deploying capital, doing deals, monitoring portfolios, and then of course delivering an LP experience that gets them to continue investing, right? Kind of that virtuous cycle that is affiliated with funds and firms. And so my background is predominantly in software as a service, SaaS, and in revenue and go-to-market leadership. I spent the last 10 years in New York City, where I was formerly the VP of sales at Harry, which is a workforce tech platform catered to hospitality. Before that, I was a consultant. I started my own firm, Skaling Ventures, that you had mentioned, and I was in business school at NYU Stern. And I was working predominantly with Series A, Series B companies that had proven some traction, demonstrated revenue, but hadn't necessarily established a repeatable sales motion or more of a, traditional sales structure or sales infrastructure. So that was the bulk of my consulting work. And a lot of times I was installed by venture firms right after they would park an investment. As part of their thesis, they wanted to get go-to-market going. And started my career at ADP in direct sales, selling software, human capital management software into small businesses. And then I spent some time too in market research, working for a firm called BMI. They sold market research mostly on emerging markets. So things like macroeconomics, country risk, political risk, and it dovetailed into 12 industries. And a lot of my work there was with corporate development groups and strategic groups that had to think about growth in a global sense and think about the data points that inform those decisions. And last 10 years, I was born and raised in Denver, Colorado. And I played lacrosse in high school, and that brought me out east. I did my undergrad at Gettysburg. And then once on the East Coast, I ended up in New York City was a blink, but it was actually 10 years, and I'm back now in Denver, Colorado. So it's been an exciting time, closer to family, and it's been a very exciting time at Altvia as well. The last 2 quarters, I was brought into Altvia, I should mention, as part of a growth capital injection from Bow River to again kind of help come in as a portfolio operator, if you will, to help get the go-to-market motion going and grow revenue.
Excellent. So you've seen kind of all different sides of the table, and obviously a lot of your targeting at the moment is targeting private equity and venture capital firms to support them. Is that right?
That's it. Yeah, which is kind of interesting. It's like selling to the groups that I used to partner so closely with, while also being installed and working closely with that audience. So I'm kind of at all seats on the table at all times. It's been kind of an interesting ride that way.
Interesting. Well, that's only going to bring more value to our listeners to be able to get a perspective. So, to kick off, what one mistake do you see private equity firms or their portfolio companies making?
Gosh, yeah, that's a really good question. I think to put it more broadly, I think it's probably an important distinction although it dovetails into the conversation around portfolio companies. I think in private equity and venture capital, I think the mistake that I see is just like a hesitation to embrace technology and a hesitation to adopt technology and to use it as something that can create tremendous leverage. There's Hugh MacArthur is a global head of private equity at Bain, and he has a quote that's been widely used at this point, but he says, when I think about the most manual industries, I start with landscaping and quickly move to private equity. And which is a little bit tongue in cheek for sure. But, I think it's interesting because, if you think in financial services is a broad category, but a lot of times you look at hedge funds and groups like that are addressing public markets, and they're some of the most tech-enabled folks in the world, right? Using really bleeding progressive technologies as it relates to data, machine learning, things like that to just be smarter and make better decisions. And if you contrast that with, a lot of the conversations I have with GPs at private equity and venture capital firms, the most important valuable piece of technology at their firm is Microsoft Outlook or Office 365. So they spend a lot of their time in an inbox and a lot of time managing, simple like a list of LPs that's worth $500 million is managed in a spreadsheet. So it's kind of like, wow, this is the world society from a technology adoption perspective has moved a lot, and the industry seems not to have quite kept pace. And I think a lot of it is because some of the incumbents have really gone unchallenged for the last 15, 20 years. Like their place is pretty competitive. And you ask a lot of these firms what their differentiation is, and it's pretty common that they'll say, we have a smart team, we're well networked, and we've got a good track record, right? But if they have to really define something in terms of an investment thesis or the repeatability of their thesis with data, they struggle because there's not a lot of technology involved in what they do. So to put it very simply, I would say that the big mistake I see is that folks try to address issues with human power. It's like we just need to hire more associates versus thinking about how technology and more so data can just give them tremendous leverage that scales up, not necessarily scaling out with headcount.
Yeah, that mirrors a previous podcast that we've done as well with talking about digital transformation. It's interesting to hear from the perspective of a private equity side, whereas the heavy focus on that was about the portfolio companies and how they need to transform. Obviously, you're coming from that kind of SaaS world, which you would say is at the forefront of technology innovation from a mass perspective. Whereas, if someone's in there, they're like, oh, we're years behind this company and this company who are doing some incredible stuff. But I think it's really interesting to hear about that, right? What could private equity firms be doing to make themselves more efficient, slicker, leaner, maybe take a little bit of the advice maybe that they can be or may not be pushing down to their portfolio to drive that technology. So that nicely brings me into one of the statements actually I found on your LinkedIn page that in your LinkedIn states that private equity and venture capital firms are on the verge of a radical technology-driven transformation. So I think you've touched on it a little bit there, but talk to us a little bit about what you mean by that. And I think that's under one of your beliefs on your LinkedIn page. So I'm pretty sure we're going to get a fairly passionate response on that basis. But give us some insight to maybe what that means, and if I'm a managing partner of a PE firm, VC firm, how do I interpret that, and what does that mean to me?
Yeah, for sure. So then I actually just wrote a piece on this, which was the first long form, if you will, piece I've published in years. And it was titled "The Digital Collision Coming for Private Equity and Venture Capital." So I think it's perhaps, I guess revolution is the right term, but I think that there's a new era emerging where operators, business people have operated in a domain that leverages very modern, very progressive technology. And they're now leaving those domains to become investors. And so they're going to make use of the tools that they're the most familiar with. And if you compare that with the status quo in the industry, it's just radically different. So for instance, if I started a fund tomorrow, right, and I had to target a subset of investors, right, I would buy third-party data sets. I would get access to tremendous amounts of information, very uncommon information. I would use scrapers to aggregate information. And I would pull things together, and I would use into a cohesive database, and I would use machine learning to execute a very simple clustering exercise to say, okay, who are the investors that I'm trying to go after based on their propensity to invest in me? So let's say I want to start a SaaS fund, right? So I'd go out and get all the data relevant to understanding who the biggest investors are in SaaS, what their exposures are, and just kind of shortlist that from a data perspective. And then I would use very common machine learning to run clustering patterns, things like that. And I would start to tease out the attributes, if you will, that make those investors unique. So the example that we always joke about, it's like, all right, it turns out, if you were trying to find friends, right? Like, all right, you want to go find more friends? Well, let's first figure out what the patterns are of the friends that you have. Like, all right, it turns out all your friends wear leather jackets and ride motorcycles, right? And we would use machine learning type technology to uncover that. That's very informed now for when I go to market, because I'm going to be targeting investors that demonstrate those attributes, right? And it's going to be a very data-driven loop. And then in terms of the way that I actually communicate with them, I'm going to make sure that there's a way where there's a feedback loop established, right? So when I bring a message out, and it's very simple technology that we're talking about. So first is just like a system of record, which is more often mapped to like a CRM, which is just a database that houses this information and allows you to kind of organize it. And then, as I mentioned, kind of some type of learning element, which is more often than not underpinned by machine learning, to actually uncover what we're actually looking for. And then I would take advantage of like a system of action, just simple email automation to get my message out to the target audience as efficiently as possible. But I would also measure very precisely how that message is interacted with, right? So what emails are being opened, what stuff's being clicked on, so I can kind of calibrate the messaging of how I'm actually speaking about my fund to make sure that, you know, I'm calibrating my messaging over time. And then I would also measure engagement to understand, you know, who's going to be the most useful person to follow up with. Like if you look at an investor who spent hours with your deck brief and who's socialized it with their firm and engagements off the charts, that's where I want to start in terms of my personal outreach, because I know that they're high engagement and that gives them a higher likelihood to convert. And that's just one example of how you might, and then you can kind of translate those mechanics into deals, right? Where you'd say, okay, we have let's say I had my fund going for a while and I understood, all right, these are the investments that we've made. Again, I would just go so hard at analysis and at harvesting all the data points in terms of those portfolio companies and how they've been performing to understand what elements make those companies unique. And then I would use that to inform how I go after new businesses, right? New private companies that perhaps aren't on the radar. And then it's all about, you know, kind of asymmetric access in that sense, right? Because a lot of the industry is underpinned by investment bankers. And this is another kind of thing that I say that's a little tongue in cheek as well. But it's like, you know, if you ask a firm how they source deals, right? The metaphor is we get invited to a flea market and we pray to God that the flea market's not totally jammed up, when more often than not it is. And we are especially hopeful that we don't reach for the same melon because then an auction ensues. Right. So mechanically, whether it's an investor at the end of the machine or whether it's a deal at the end of the machine, there are a lot of things that you can do to make sure that data does the heavy lifting in terms of actually understanding who you should go after, and then using automation to actually streamline a lot of that communication to take out the time intensity so that you're only spending time on folks that are the most engaged. And we use engagement as a proxy to understand likelihood of converting and becoming an investor, or likelihood of converting and becoming part of the portfolio. So tech stack wise, you know, that might look like a CRM, simple CRM, you know, obviously Altvia's in this business. So for Altvia, it's the Altvia platform. And well, some of the things that I just mentioned are still coming along and we're developing those things, but that's just how, you know, the kind of thinking about, all right, folks that come from my domain, when they enter into this industry, they're going to be used to those types of mechanics and to those types of things. So, and I'll spare kind of a deeper dive on the tech stack stuff for now. But just to answer your question, Alex, is, you know, the people like me are coming, and people like me are coming from the hedge fund space, where, you know, you ask them what informed their investment, and it's like, oh, you know, we looked at satellite imagery to understand crop yields, and then we, you know, cross-referenced that with credit card transactions to understand that this commodity price was going to move. Like, that's happening in that space. And if you contrast that with private equity today, it's like, well, how do you raise money? It's like, well, I look at a spreadsheet of, you know, our current investors, and then I call them and see if they want to invest again. And so it's just, they're operating in a way that's not taking advantage of a toolkit that is not only, I would say it's almost kind of table stakes in most industries now. Like, it's not even bleeding edge, totally progressive stuff. The really bleeding edge folks are, you know, buying data sets on the dark web, you know, and like it gets out there pretty quickly. But the industry is going to change quickly, and the current incumbents are going to have to, you know, hustle to reinvent themselves to be more digitally native and more tech modern, or there's going to be a real changing of the guard. And so I use the term revolution, but it could mean a few things, and I guess we'll see here in short order.
Okay, and I think there's a lot within. I mean, there's a lot within that what I want to target. But there's a, you know, again, if I'm sat here as a let's imagine I'm a managing partner of you know, mid-market private equity firm. We've got 3 billion AUM. And I'm kind of thinking, okay, well, what we've always done it this way. The key word that they hear in their portfolio, and they're like, absolutely not. We have done it this way previously, but we're not going to change. Let's say I'm afraid to change, and I'm
Sure.
kind of like, look, I embrace the fact that technology is coming. You know, when someone says words like machine learning, it's probably like, I don't understand what that means. So what would be a simplistic, easy move to say, look, if I was coming into a private equity firm right now, you're well established, you're probably against change, but there's an inkling of interest. in making some kind of level of technology improvement within our firm to help us, what couple of areas would you begin with? Look, really easy to step in would be, firstly, I'd implement this because it's simple. And secondly, I'd look at this. One of the things I think you mentioned there was clearly an outreach cold email platform, which is something we use here. Maybe that's one. But I'm not going to drive you down that path. But what two would you give somebody as a simplistic way of that's fairly easy for them to implement, and they could probably grab an associate and they could probably make those changes in the firm?
Yeah, so the worst answer to any question, but often the best one is it depends. I think, if you're looking at if a firm really has no true kind of system of record, and as I mentioned, because if you think about what a CRM is usually underpinned by, and for those that aren't as familiar, it's a customer relationship management tool. It's really about understanding accounts, contacts, and then the investment vehicles, pools of capital. But it's like those are kind of the core elements that a CRM addresses, which maps very well to the core, like the I guess elements that are closest to a firm's point of differentiation. It's usually how you raise capital, how you engage investors, how you engage management teams and CEOs and do deals, and those things map very neatly to a CRM. So I would say if they don't have a system of if they're still living in spreadsheets, if they don't have a database that says this is what our network is, this is our network, this is who is involved in it, these are the interactions that we've had with them, that's a very basic place to start, because it's going to create visibility across the firm. It's going to make sure that their activities are coordinated. It's going to make sure that they have a sense of priority in terms of how they manage relationships based on the quality or based on the value of those relationships. And that's really a brass tacks. You need a system of record for the firm so that everybody's on the same page, because it's such a network relationship driven business. So if that's not in order, and they're very basic CRMs, they're even like structured spreadsheets via like Airtable and things like that, that would be a substantive lift, just making sure that it's consolidated across the firm and that it's coordinated, right? Because then you can start to really extract the value from the network. So if that's not in place, then that's where they have to start, because that's where people are on totally different pages, and operationally, it's just very dysfunctional. If that is somewhat in good shape, then usually the next most interesting place for impact. And if we look at just tendencies from the market, like you and I, right? If you have a portfolio of stocks or 401k or anything like that, you step into Fidelity, you step into Charles Schwab, you're not calling anybody to ask how those things are performing. You step into those portals and it's a very consumer-centric experience, right? You see your portfolio, you can slice and dice it, you can make trades, you can ask questions, you can do whatever you want. And the bottom line is that that's what's conditioning us as consumers of technology. Right? It's those experiences that we have as consumers. And if you contrast that with the experience of a lot of LPs who are the GP's customers, right? The LPs give money to the GPs to invest. A lot of times they have zero visibility into anything. So it's like, hey, how's fund A doing? Or how are those four SaaS businesses in that portfolio doing? I've been following the news and it seems like this category is really exploding. I want to make sure that we're riding those tailwinds, things like that. So it's a very opaque, very antiquated experience. But LPs, their preferences, the way that they consume things is just naturally kind of shifting towards a more self-service, on-demand, technology-driven experience, right? So I would say if the CRM piece is not in order, like the kind of foundational kind of operating structure of the business isn't in order, then the next place to optimize for is for the investor portal. So bringing a more digitally immersive experience to your LPs, because it's going to give them the type of visibility and transparency that's going to build trust and make it more likely that they'll continue to invest with you. And B, because that's the stuff that they're used to, and other firms are starting to provide that, and they're going to naturally gravitate towards that, because what they can't see in real time, they're going to be less likely to trust. And obviously, if returns are through the roof, no one's going to ask any questions. But yeah, so I guess just to recap, a foundational CRM, just to understand the relationships and the context and how you're interacting with folks is the most important place to start. That'll create the biggest lift operationally for the firm. And if that's somewhat in order, then I would focus on the LP touch point, which usually manifests as a portal, and making sure that that's something that's digital, branded, and that provides something that's analytical in nature, so that LPs can understand how the funds are doing, how the portfolio companies are doing in real time.
I think, and you made some great points there, but I think a really interesting point is that we are changing the way that we want information, and that's happening. I think we kind of see LPs as big institutions and big companies, and therefore we don't see them as people. But the people within those businesses that are making those decisions to invest in these firms are seeing things differently. You no longer have to ring up your stockbroker and ask him how a stock's doing, what's happening. You log into your online platform, you look at it, and you can see real time whether it's up, down, wherever it's at. I think that's a really interesting point. Is that I don't know. I'm sure there is private equity firms that are offering that kind of level of detail. And I know investor relations directors pull together that reporting structure, and there's a lot of time spent on gathering data with portfolio companies. And this is probably information that they've already got, you're already aware of, you know where everything stands, and being able to deliver that to an investor. And when you're doing your fundraise, that's where your differentiating part happens. And this isn't going to be jumped on. Maybe Carlyle Group probably have something like this. Maybe I'd hope they already have a CRM. It's those challenging firms to those businesses where you're in the low middle market, you're battling on day in, day out for LPs, you're concerned about raising that fund, and you're giving that kind of level of differentiation where you're actually going to get told all the time how things perform. This is where we've got to, this is how we get it. And it's that level of additional service, additional positioning, and it just goes in your deck, which you share with an LP. Am I right in positioning it that way?
For sure, because I think, and interestingly, or I guess a more digital first experience, and a lot of it depends on the demographics of the LPs, right? Because some folks, you might offer a very digital experience to an LP, and they're like, print that off and overnight it to me, because that's how they're kind of a different demographic, right? They're not as tech savvy and they're used to consuming information that way. But what I would say is that we're seeing that's very interesting is you have these funds that are emerging that are taking a very technology first approach, and it's giving them differentiation that they wouldn't have otherwise had. So they're coming in and it's like, hey, I don't have much of a track record. I was, a VP at XYZ fund and I manage this portfolio and you can see the returns, but I don't have like an independent track record. So it's hard for them to sell on that because track record is really king. So they're bringing the actual LP experience to the forefront. And most of the time it's technology that touches that allows them to be differentiated. And it's allowing them to compete with the bigger firms, even though they're leaner and meaner. Because again, they understand technology and then they understand the leverage it can give them. Right. So in the topics of like fundraising, we see teams of 2 or 3 that have the same output from a fundraising perspective as teams of 20. And again, because they're just tech enabled. Technology is leverage. It's as simple as automation in many cases,
Driving that through. And I'm pretty sure there'll be a lot of any investors listening right now, and they're going to be thinking about deal origination. So one of the things that you mentioned was that side. I speak with private equity firms. If they're not talking to me about talent, they're usually like, look, we're fine right now, but if you come across a deal, we'd love to hear about it. I'm starting to speak to different firms that are doing things differently. Off-market deals, I'm speaking to firms that are like, we do off-market deals. We don't deal with investment bankers. We go direct, and that's starting to happen more and more. But I'd still say, 95% of the market is still running through an investment banker, an M&A advisor, and basically, as you mentioned, at the flea market, hoping that they grab the one where not everyone else wants, which may be that it's not a good deal, or maybe they see something else in it. I don't know. But what do you think that they could be doing on that front from a tech perspective to get ahead of the game? Yeah,
for sure. Because I think proprietary deal flow is the holy grail, right? And usually, and as you'll hear a lot in the industry, it's usually about speed. And many would say that speed is actually more important than capital. So how do you go about that? And if we use publics, because it's a bigger market, it's a bigger addressable market, as a proxy for the direction that anything in capital markets is going to move, what do those markets look like? They're fully digitized, right? So you have public companies and you have investors and there's exchanges, and it's literally digital. So there's no intermediaries, right? Because that's an inefficiency in the market where the intermediary is actually taxing for that transaction. And it turns out that the internet is very useful for connecting markets, right? In an almost seamless and highly liquid way. So on the topic of proprietary deal flow, I would encourage folks to understand, like, how have they quantified their network, and how do they understand the connectivity across their entire network? And then it's all about data. So what are the data streams that they have unique access to that allow them to find private companies? If we're just talking about, kind of traditional private equity, to find private equity, firstly, they have to be airtight on what their investment thesis is. But if you're looking at like what's a good example here? Let's just say private software, because that software is kind of my domain, so I know it the best. But right, if you know software or if your investment thesis is to invest in software companies that have between $5 and $10 million in ARR and a clear line of sight to cash flow positive in a 5-year timeline, and they operate in certain geographies, like that would be kind of a surface level thesis, right? You want to probably get down even more granular to really understand, right? Like they have sales teams of between 5 and 10, and their the growth in recurring revenue is X or Y, and it looks like in terms of market share they have a concentration of X based on a competitive set that is concentrated like Y. So get extraordinarily granular. And again, you can't do this unless you can look into your portfolio and you're able to actually take the data and understand what are the sweet spots that you're looking for beyond just the basic and just the general. So the first thing is to get a quantified, real good handle on what type of deals are in your sweet spot, right? And that are actually differentiated for you. And then it's a conversation around, all right, where does information flow around those companies? Right. Firstly, it's just like, how can we get all those businesses that meet some type of criteria on our radar? Right. And it could be as simple as, buying lead lists or buying account lists from, data vendors, something like that. But firstly, you just have to kind of understand, in my terms, like, what is your addressable market in terms of the companies that fit your criteria that you could go after? And then how do you cheat? How do you get as much information around these companies as humanly possible? Like something that I heard, and a lot of times what's simple for that is just simple news feeds and just pulling them into something. There's Slack integrations that will surface companies that meet certain criteria. Like there's a lot of vendors that do the heavy lifting of actually harvesting the data, and whether they're using bots and scrapers or whatever, but they'll just put together the signals, if you will, for companies that kind of meet your criteria. And from there, the conversation is like, okay, so we're crystal clear on what truly makes the companies unique that we're going after. We've got a good handle on the nodes that exist out there and how we can kind of harvest information on these companies. And that's half the lift, right? So, and you have to be clever. And a data point that I heard the other day that was pretty interesting is one of the best proxies for revenue growth in private companies, where obviously that data is pretty opaque, is the churn rate of their salespeople, which you can look at in LinkedIn. So if you go into a LinkedIn account, you can see what the headcount by function looks like, and you can see if their sales team is churning or expanding, because revenues must be looking good, or salespeople are churning because the product's not selling or they're not being successful. Right. So that's a really good proxy that's not necessarily obvious, but that's available publicly on LinkedIn. So it's usually the data has to do the heavy lifting, because otherwise you're going to have a team of 50 people in a room cold calling CEOs at mid-market companies that you got off of the Inc. 500 fastest growing companies, asking if they need capital. Right. And that's just not going to do it. So that's kind of one, and I'm going to try and not go too down the weird way, tacky or techie track. But another one too is to is to make sure that, like, let's say you've started to shortlist, you've started to shortlist companies that you've been introduced to or something. But again, this part starts to come down to, how are you pulling qualified companies into a thing where they're now squarely on your radar? And how do you pull them into an operating model where you are consistently keeping tabs on them, where you're developing relationships with those CEOs early? Because a lot of times it's relationship driven as well. So you want to start to build a network of warm leads, if you will, of like, hey, here are the CEOs and here are the operators that we've spoken to. And at that time, it wasn't right. Like they weren't trying to take any capital, they were bootstrapped, whatever the case may be. But how do you pull them into your world now, where you're nurturing that relationship over time and you stay on it? Right. And you stay front of mind. And again, that usually comes down to some type of CRM mechanic where it's like, hey, here's a cohort of CEOs. We like them for X and Y reasons. We're going to keep an eye on them. And how do you pull that into your operating model so that you have touches out to them and that you're communicating value? And interestingly enough, right, it's usually the same data when it comes to what the firm's up to. And it's just, as we say, old wine, new bottles. And the framing is just different. So more often than not, the communication to investors is, hey, look at our track record, which is, portfolio performance, fund performance. Look what we've done. We've been able to generate outstanding returns. You should give us your capital. And it's almost the exact same storytelling for management teams. hey, these are the companies that we've partnered with in the past. Look at the value creation, look at the returns that we've been able to generate for the founding teams, whatever the case may be. But you want to make sure that it's a data-driven storytelling that's going into the management teams, because when they do need some capital, you're going to be the first person that they call. So that's like more of like the nurture thing. And then, and I guess just to kind of recap, the first thing is you have to find an edge, and it's usually going to be determined by data and asymmetric access to information. And there's so much internet on the information, it's insane. And you have to be clever to kind of find little streams that'll tip you off that like, ooh, this fits our investment criteria, and be crystal clear on why your investment criteria is what it is and why it's differentiated. And then those companies will be on your radar earlier. And it's, again, a game of speed. And then have some type of very thoughtful nurturing mechanics for the groups that you speak to, because very rarely you're going to call a CEO and he's like, yeah, actually, we're raising a Series A. We just haven't disclosed it yet. This would be great. We were looking for a $5 million check, right? Like, those are silver bullets that very rarely happen. So how do you pull things into a pool of warmed leads, if you will, and nurture those things over time? And then, like, one last thought there is actually understanding what's yielded your results. I mean, even on like the deal sourcing side, like a lot of times groups will spend, like, there won't be an analytical rigor in terms of looking at their deal sources. So they'll make simple mistakes like spending all their time on the bank or whatever that has given them the most leads, versus spending all their time on the bank that has given them leads that have yielded to closed deals that have generated the best returns for the firm. So they kind of act without a sense of priority or an understanding of what has yielded their results. But I said that, like, the lead sourcing thing is, as you mentioned, more common than not. And so it's more about how do you extract as much value and leverage from those sources. And then back to the beginning of our call, then how do you look at that deal source and understand the attributes that make that deal source unique, so that, guess what, you can go out into the market and find deal sources that look and feel like them, because that's what's been yielding most of your results.
I think that's all really, really good stuff. And I can really relate to, if you think about any type of business, especially with business services type company, which, financial services, business services type business companies, and executive search is exactly the same. We're looking for, all it is built on huge amounts of data. Who do we know? Who can we know? How do we know that these people exist? And then being able to keep managing that. And it does look, and anybody who's listening who's thinking this is really overwhelming, and that's a lot of information, that's a lot for me to do. I've got to raise a fund, I'm trying to manage portfolio companies, just to look within your business and think, okay, this isn't your gig and this isn't your space. Who could you give a little bit of this to? Who could you go out there and say, one of you guys, look, can you go and look at a CRM? Can you go and look at how we acquire some data with regards to companies that are this size of revenue, that are these industries, and that are in this country, in this area, or have X, Y, and Z? Because that information is available and that is out there. And yes, you'll get lost in Google. Yes, you won't find it on your first hit. You may do, but that continued looking into this area will make you at the forefront of technology quite quickly, because we all operate in archaic industries, and we all operate behind the times of technology, and we want to be using this. So I can definitely relate to that. It's the reason why I get the question of, you're in the UK, how on earth can you help us fill a position in the middle of nowhere in the US? And the answer is because we have data on private equity backed companies, and we keep that data up to date. So we're not starting from scratch. We're not starting from the beginning. We have this information, and we're starting already halfway up the mountain. We've just got to go over the next half to identify that. And also, technology. And I don't need to be in New York to place someone in New York, or, we've got search in Jamestown at the moment. Absolute middle of nowhere for a chief exec appointment. We've got a big shortlist across to our client because of that data and the fact that we've sourced it. So it does sound daunting, and it did to me when I first began that kind of journey. And I'm not trying to compare myself to a private equity firm, but if we put it simplistically around data and data generation, is just hit the internet and see what you can find. But find someone in your firm if it's not for you to do that, I think.
Yeah, for sure. And I mean, I think 9 times out of 10, anything that's proprietary is probably data in the private equity venture capital game, And I would say too, what's interesting, like from like trying to spin up proprietary deal flow, like a very productive step. And what is some of the most proprietary data that a fund has? The data on their private companies that are in their portfolio, right? That is one of their best points of access to very asymmetric, very opaque data. So if you're trying to figure like, hey, we just raised a fund and it's our second fund, same investment thesis, and we want to just double down on what we've done, I would encourage you to spend a ton of time with your existing portfolio. And actually, because you can go from, all right, we're investing in mid-market service businesses, right? That pizza pie is massive, right? That's so big. And if you can actually spend time with your portfolio and understand, okay, what were the breakout performers in the portfolio and what were the true attributes, right? It might be something as simple as understanding that, wow, this was a repeat entrepreneur. This was his third business. Interesting. So were the other two groups that were total home runs. Okay, so now we're looking for mid-market service businesses who are CEO'd by a repeat entrepreneur. And that takes the pizza pie and shrinks it down here. And so, but that gives you a sense of priority in terms of how you go to market. And as we always say in go to market, right? If start small to go big, be hyper focused, and the learning will be tremendous. But again, it's all about, and even if that's a very manual motion, at least you know that the pizza pie is this big instead of this big where you're just, calling the phone book. So.
Excellent. So look, I really appreciate that. And that's some great advice for anyone who's listening to be able to get on that foothold of technology. So to jump onto the other side of your work, Kjael, with actually looking at growth stage and working within growth stage companies, what advice would you give, or what one piece of advice would you give either to a chief executive or a private equity venture capital investor to help accelerate that growth of that growth stage company?
Yeah. Gosh, it's so funny how connected all of this stuff is. Like the macro themes are just so common because for me, the thing at the end of my machine is a private equity or venture capital firm, but all the mechanics are kind of the same. For a private equity group, it's either an investor or a deal, right? And for a growth stage company that's a portfolio company, it's whatever their customers are. So I think it really just starts with getting crystal clear on what the term called ICP. So what does your ideal customer profile look like? And it's probably, if you have any customers at that point, it's about really mapping and starting to understand what your current customers look like and what the attributes are that make them unique. And then to take that a step further, then you start to think about personas as well. And persona meaning someone of a certain function that has a certain level of seniority. But in terms of creating growth is usually about taking the market, and I always use a metaphor. It's like a tree on a fruit, or fruit on a tree, I should say. And so it's like, all right, we need to understand what the industry looks like that we sell into, and then we need to think about what our ideal customers look like, and that's the lowest hanging fruit on the tree. And so we need to focus all of our energy on acquiring that segment of the market, and then we lift the ladder up, and then we acquire the next segment of the market. So it's about having a relentless sense of priority. And I want to say sequencing the market, but that terminology isn't exactly accurate. But it's more so you're constantly focused on the lowest hanging fruit, because that will yield the quickest conversions. So in a sale, like let's say it's an investment in a company that sells something, the metrics that you're optimizing for are sales cycle. So how quickly you can sell something, and contract value. The size of it. And this is a funny thing. A professor in business school once taught me that it was like, what are the two ways to grow revenue? And everyone looked around. They're like, 2 ways to grow? Can it be that simple? He's like, you either sell more widgets or you sell the same widgets for more. Right? I was like, God bless you, So, in terms of accelerating growth in a portfolio company, it's usually about introducing a relentless sense of focus on who the ideal customer set is, and the personas that make decisions in those environments, and acquiring that section before you move up. So more often than not, groups are trying to boil the ocean. They're like, hey, we sell this app, we want to go after everything. And it's like, no. Focus. What's the lowest hanging fruit? Because then you win a client there. Just a simple kind of way to communicate how the momentum builds. You acquire a client in that ideal customer profile set, the lowest hanging fruit. Now you have a case study, and guess what you use to market? The case study, right? And that informs all of your marketing materials, all your talk tracks, and all of how those things go. So I would say my biggest piece of advice for anybody trying to accelerate growth is get crystal clear on where the lowest hanging fruit is, and don't stop until you've acquired it, and then move on to the next rung of fruit, if you will.
Makes sense. So my favorite topic is talent. As a chief revenue officer, I'm sure you've had your exposure to good and bad salespeople in particular, but just a general overview of people just a general overview of people. What are the 3 attributes that you believe makes a top performing person?
Oh my goodness. That's a good question, Alex. I think something that has always stuck with me is that if you get talent right, you can get a whole lot of stuff wrong. And I just love that because it's the truth. Talent makes the world go round. For me, if it boils down, I look for bulletproof super learners. Because I just index purely for an individual's pursuit of growth. And if I know that they're constantly finding ways to consume information and stay current and stay relevant and be a pioneer in their field, that they're focused on their rituals and their rhythms and what they can do personally to access new levels of performance. And if I know that they can take, that they have moxie, that they have grit, that they can take rejection and that they don't quit, and that there's almost like this obsessive pursuit of the next plane and trying to always kind of rise, then I know that they can execute pretty well in just about anything, because they'll have the perseverance to acquire new skills. Because that's the other interesting thing too, right? It's like, oh, hey, but there's an industry learning curve, or, and Gary Vee, he said something, and I'm not a huge fan. Some of his stuff I really latch onto. And one of his things is, you can commit to the product or the process. And it's like, are you better off, and the example he gives is, are you better off being, let's say you love cars, but you love sales. You're better off being a toy salesman than you are being a car mechanic, because we should index towards the process, towards the craft, right? And that will yield more fulfillment over time. So as long as I know that somebody's committed to the craft that I'm bringing them into, and that they have those kind of bulletproof super learner attributes, I know that we'll do pretty well. Because the notion of learning curves, like, can we bring somebody from another industry into this if, again, they're committed to the craft and they've demonstrated excellence in the craft? I'm not worried about the learning curve, because this is just the first of a million learning curves, right? If they haven't been able to overcome learning curves or adapt to new industries or adapt to new environments or new market macro conditions, they're in trouble no matter what domain they're in, because business moves so fast. So that's my answer.
I love it. I love the, what was and just to get it right, the super learner, what was the exact phrase that you used there?
I would say, so bulletproof super learner, just to pull it all.
Super learner. That's it.
Yeah. And so the questions I love are, what's a book that you've given the most to people? Or what's something that's had a tremendous amount of impact on you? That was a piece of content that you consumed, and how did you use it? Who did you share it with? Things like that, or tell me about it. Not always, and you know this domain better than any, but just kind of behavioral based stuff, just to understand a time that they got their butt kicked over and over and over and over and over, and like, why did you keep going? Why didn't you quit? And then how did it feel when you get to the other side? Like, what did you learn along the way? How did you apply that learning? And that's another thing that I'm kind of maniacal about. It's like, I'm not happy with learning unless I can understand how you applied it. Because to me, that's where the rubber meets the road. And again, we need to be just constantly evolving, constantly adapting to be outperformers in any field.
Yeah, absolutely agree. I think the people who learn are the people that become the best. And once you stop learning, you've hit ceiling, and you've pretty much done. Because there's I'm a huge believer of that, and massive to that effect. What so the private equity venture capital industry, what do you love about the industry? And equally, what do you hate, or if hate's too much of a strong word, what do you dislike?
Oh man, what I love about it is that it's so influential. And I keep pulling out. I literally just published a piece, this digital collision piece that speaks of a lot of this. So I'm trying not to spit that stuff out verbatim, but that it's so powerful that literally that industry determines the flows of capital, the flows of talent, in a lot of cases, the flows of decision making. It influences regulatory environments, right? So it's known to be the intelligentsia of society. It's known to be the best educated, most credentialed segment in society. So with that comes tremendous leverage. If you can influence that thing, just by definition, you should be able to influence all the industries, all the executives, everything that it serves. So I see it as a tremendous point of leverage, not only for society, but also for technology and just intellectual stimulation, man. It's just an exciting space. But let me think here. I want to be a little PC in this response. What I dislike about it is that it's, I'm just going to let it rip, is that I think in many instances, it's just a perfect example of like an elite, guarded, systemically privileged thing that has existed for so long. And what do I mean by that is a lot of the reason, if you ask me, why these firms haven't evolved is because it's hyper wealthy people who are getting investments from hyper wealthy people who are their friends, and who are their friends, who are their kids are friends, and their dads were friends, and they summer in the same places, they fly on the same jets, they do all these same things. So the connectivity of it hasn't been broken, it hasn't been democratized. And so I think a lot of times there's an arrogance perhaps that's associated with that, because I have interacted with GPs that are without question the smartest person in the room, zero question, and it is remarkable. I cherish my time with those people. On the contrary, I've interacted with far more. Maybe for every one of those, there are truly 99 who think they are the smartest in the room and treat everyone else like they are the smartest in the room, and nothing could be further from the truth. And that's the stuff that frustrates me, but I also find it deeply motivating, because there's a democratization that is going to happen in that industry, because people who are hyper intelligent are going to use non-traditional methods to hack their way in and take it. And that's what I'm the most excited about.
Yeah, I think it's a fascinating industry, and I think it does attract both at the portfolio company level, at their C-suite execs, and at the private equity professional, back office professional level. It attracts some really incredible people. There is some amazing, intelligent investors, amazing CFOs in the private equity firms, amazing investor relations people, some of the real top people in their industry. But private equity does carry with it a little bit of this is kind of an elite, and therefore if you're in it, you kind of do have that. Not everybody, but some people do have that confidence that they are at that level, whereas they probably haven't invested in themselves well enough to be at that level yet. So I completely agree. But yeah, what a fascinating space to be in, certainly. What are you, you mentioned about learning? What are your influences? Where do you get your influences from? What do you read? What do you watch? What do you listen?
Gosh. So I usually keep like a backlog. Like I try to balance stuff like learning that kind of is like more spiritual, I guess I would say, or more kind of psychological in nature. And then I balance that in with macro, and then I balance that against like just skill acquisition. So on like the spiritual side, I just read The Untethered Soul, which is extraordinarily interesting, by a dude named Mickey Singer. Highly recommend it. He was the CEO at WebMD, and he kind of just takes him through his kind of spiritual journey. Very interesting book. On the kind of macro space, I rely a lot on biographies for that. So I'm reading Soft War, which is awesome. I just started into it, which is the biography of Larry Ellison of Oracle. And it's kind of interesting. He basically gave an economist journalist the space to write it, but he, under one condition, he was able to chime in. So there's always these little footnotes from Larry, which are kind of hilarious, because he was a unique human. And then on the skill side, competing in the age of AI, I read recently, which was something that was handed to me by a close friend, and that's had a huge influence on me. And then outside of skill wide, SaaS Methods, Jaco Van, gosh, his name's tricky, but he has a lot of kind of quantitative approaches to SaaS, like the SaaS method in terms of go to market. So I read everything that he puts out. I'm really focused on customer success right now, and product management and product led growth. So I have a backlog, and interestingly, content on like the skill side, usually the best of the best is content marketing from the best of the best vendors in that domain. So I rely a lot on the best SaaS vendors in those domains that sell products into those categories. Like Clearbit, for instance, they have data-driven marketing, data-driven product management, which is usually just a consolidation of all the best of the best in the industry that are, you guessed it, clients of theirs. I'm trying to think what else I've read recently that's been very impactful. And then I have like the daily beats, right? Like, and that's my word of advice to anybody. I went in and just kind of pruned all my newsletters, and And that was very fulfilling. So don't, if you, and it's just like going to market, right? If you try to read everything, you end up reading nothing. So Scott Galloway was a brand strategy guy from NYU. He wrote The Four. He's written Algebra of Happiness. He was the one that kind of tipped off the whole WeWork implosion when they posted their K1. He's a professor at Stern. And he has No Mercy, No Malice. His newsletter is outstanding. Tom Tungus of Redpoint has a very SaaS-centric newsletter that I read religiously. And then I've got like Axios. I read PitchBook, stuff like that. But I kind of break it into like stuff that helps me operate better because it helps with my psychology, stuff that helps me understand the world better macro-wise, and then like the skills that I need to understand. And those are like the big block stuff that I read. And then I have like my daily beats, which is more about staying relevant with current events.
Excellent. That's a lot of stuff. Lots and lots mentioned there. So thank you very much. So if somebody wants to reach out to you, Kjael, someone's listening to this and they're thinking, okay, I need to learn more. I want to speak to you about your current business or, just in general, how best do they drop you a note?
Yes. So Kjael, which sounds like Kjael or is spelled like Kjael, I should say, KJAEL at altvia.com. And I'm always up for talking shop or networking, having these types of conversations. That's what it's all about.
Perfect. Well, we'll put that in the show notes for anybody to reach out to. Well, look, Kjael, thank you very much for joining us today. There's been a really great insight, lots and lots for anybody listening to take away. So thank you very much for that.
Cheers. Thank you, Alex. Sincerely appreciate the invite, man. It's been a pleasure.
And as always, thank you very much for those listening. And of course, should you ever need support with your private equity professionals or portfolio executive hiring, please do reach out to me at Raw Selection. And obviously, please do subscribe to the podcast so you get the next one in 2 weeks. But till the next time, keep smashing it. And thank you very much for listening.
Thank you for listening to the Private Equity Podcast on www.raw-selection.com.